Welcome to the weekly review of the markets from Hernandez Retirement Services. This is Agustin Hernandez. Before we begin the charts, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is the forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts reference are subjective. No strategy can ensure success or protect against loss. Investing involves risk, including loss of principal. On this week's agenda, I will go over the S&P 500. Is this index still in a downtrend? I will also analyze the NYSE advanced decline line to see if it is confirming the current trend of the S&P or is it telling us a different story. With the recent rally, is the pullback on the 10-year US Treasury note over? Afterwards, I will look over three indices that are beginning new uptrends: Brazil, Indonesia, and gold. I start this week with the S&P 500. We will look at the daily price over the last 3 months ending January 25th, 2019. The indicators will be the 50-day moving average and the 200-day moving average. Now, over the last month, the S&P has been in a rally. In fact, it has only experienced 5 down days during this time frame. But despite the index passing the 50-day moving average, it is still in a counter-trend rally. In fact, the 50-day moving average is still sloping down. Now, price has yet to get above its long-term trend moving average. It has not been above it since late November. So, despite the nice counter-trend rally, the S&P, based on these two technical indicators, is still in a downtrend. Now let's go and see whether the New York Stock Exchange advanced decline line is supporting the downtrend narrative. The advanced decline line is a breadth indicator based on net advances, which is the number of advancing stocks less the number of declining stocks. Net advances rise when there are more advancing stocks. So when the line rises, that means there are more stocks rising than falling. The AD line is used by many traders to confirm the strength of the current trend and its likelihood of reversing. Now let's look at what this index is telling us. Now, unlike the S&P, the net advance issues have gone up above its 200-day moving average, which is a good first step. But we still see the 50-day moving average is still below its long-term moving average. The 50 line has flattened out, so maybe we may be seeing the beginning of a new upward trend. But despite seeing some encouraging signs, these two moving averages are still telling us that there are headwinds and that it supports the S&P downtrend narrative. Now let's see what the effect of the S&P rally has had on a 10-year US Treasury note. Now, with the recent rally in US equity markets, the 10-year US Treasury note was in a pullback. As we can see, even with the downtrend movement, price is still above both its 50 and 200-day moving average. Also, it seems that the index is attempting to find a bottom from its recent pullback. Finally, looking at the relationship between the two moving averages, they are in a bullish pattern. Now, the key will be, can price find a bottom and begin rising? And will its 200-day moving average begin sloping up? For now, this index is in the early stages of trying to build a new bullish rally. Now, let's look at some other indices that are beginning to try to start a new uptrend rally. Here we have the Brazil Bovespa Stock Index. Now, I have featured Brazil in previous videos as it was in the process of trying to start a new bullish rally. Looking at the chart, we can see price rising consistently since the end of the previous year. It got back above its 50-day moving average during that time. Also, if we look at the same moving average, it is rising. Now, one thing we don't see is the 200-day moving average. What we do know is that it is below the price of the index and the quicker 50-day moving average. So, this market as of now is in the early stages of a new bullish rally. It will still need to survive a pullback, but for now, it is defying the global equity downtrend. Now, let's look at another country that is showing strength. Here we see the Dow Jones Indonesia Stock Index. What does the chart show us? Well, since the index got a golden cross, the index has rallied. Now, we have price above both its 50 and 200-day moving averages. That is good. Now, like all early attempts to begin a new bullish rally, a change in the slope of the 200-day moving average will be needed. If this long-term trend line can begin to slope up, we may be seeing another country join the Brazil Bovespa in defying the global equity downtrend. Now, let's look at another index that is beginning to show signs of strength. Now, the final index that is starting to gather strength is the Gold Continuous Index. Looking at the moving averages, we see just recently this index experienced a golden cross. It's when the 50-day went above its 200-day moving average. Price is above both moving averages, which is good. Now, I know I sound like a broken record, but for a true long-term bull run, the 200-day moving average will need to slope up. For now, this asset is in the early stages and it can experience pullbacks. It will need to prove by surviving and then thriving on any pullbacks. But it is worth keeping an eye on as it may be in the beginning of a new bullish rally. What does this mean? Despite the rally in January, the S&P is still in a downtrend. Yes, price did get above its quicker moving average, and yes, the NYAD line did get above its 200-day line. But their key moving averages are still in a negative pattern. Both the S&P and the New York Advanced Decline Line 50-day moving average are below their 200-day moving average. For technical traders, that signals the S&P 500 is still in a downtrend. Now, with the recent rally of the S&P, the 10-year Treasury note has struggled. But for now, it has survived and price looks to be trying to find a bottom. Now, a true sign of a bull rally would be to get on another run, get price to break above its old high, and get its 200-day moving average to slope up. We are starting to see other indices trying to begin new bull runs. Two of these, Brazil and Indonesia, are doing it while the majority of the world equity markets are still in bearish territory. Can these two emerging economies continue and lead the charge for global equities? I will follow them over the next couple of weeks and see if new true long-term bull runs can be hatched before our eyes. And finally, gold. It has been in the long-term downward state since August of 2011. Yes, you heard me right. It has tried on occasion to break out, but never has had enough strength to last. For now, it is beginning to show potential of finally breaking out. I caution, it is still too early to predict, but this index will be a good one to keep an eye on. It has already had a golden cross. Now, can its 200-day moving average begin to slope up? Time will tell. I would like to thank you for viewing this video and I hope it was helpful. Please subscribe to my channel for future videos.